Is keeping your hard-earned money in a bank still the best way to secure your future? For generations, we've been taught that saving meant stashing cash away in a bank, waiting for interest rates to compound. But in our rapidly evolving financial landscape, where interest rates are dwarfed by inflation and economic uncertainties, this method seems somewhat archaic, almost like storing money under a mattress. It's time to challenge the status quo by considering more proactive and engaging forms of investment. Beyond the traditional bank savings account, a world of assets beckons, offering not just potential growth, but also a new level of excitement in shaping your financial narrative. So, if you find yourself nodding along, feeling ready for a change, let's explore the 8 modern assets that could redefine your approach to investment. Why cash is no longer king. For generations, we've heard the adage that cash is king. However, in our rapidly evolving economic landscape, this phrase is losing its reign. With today's historically low interest rates, money left sitting in savings accounts is often subject to erosion through inflation, effectively losing value over time. Additionally, traditional banks offer little to no yield, making it nearly impossible for your wealth to grow. In stark contrast, alternative assets can potentially outpace inflation, allowing for actual wealth accumulation. But what are these mystical assets that promise opportunity beyond the conventional? Let's unveil these one by one. Number 1. The stock market. Our first contender, the stock market, has long been the battlefield of investors, big and small. This arena's magnetic pull is the potential for substantial returns as you garner equity in businesses, from towering corporations to startups poised for innovation. Your stake in these entities means you're along for the ride, whether it's a meteoric rise or a cautious trek uphill. But there's more than just buying and selling. There's the art of strategic portfolio diversification, balancing sectors, understanding the subtle dance of risk and reward, and decoding financial forecasts. Dividends also sweeten the deal, offering periodic payouts in addition to potential valuation gains. However, it's not a journey for the faint-hearted. Market volatility can turn confident predictions into unforeseen outcomes, necessitating a blend of patience, education, and resilience. Yet, for those willing to embrace these dynamics, the stock market remains one of the most accessible and transformative realms of investment. Number 2. Real estate. Venturing into the world of real estate, we find an investing path paved with more than just bricks and mortar. This tangible asset class speaks to the foundational human need for space, whether it's residential, commercial, or industrial. And with this perpetual demand comes the investor's opportunity for steady, often inflation-beating. Real estate's allure doesn't just end with the potential for passive rental income. It's also in property value appreciation, driven by factors like development, urbanization, and economic growth. However, real estate investment isn't merely a transaction, it's an ongoing commitment. From understanding local markets and laws to managing properties or dealing with tenants, it requires dedicated involvement or delegation via property management firms. Then there's the liquidity aspect. Selling property isn't an overnight affair and comes with significant transaction costs. Despite these nuances, real estate's tangible nature and the sense of security it provides often outweigh the hurdles, making it a cornerstone asset in the world of investing. Number 3. Cryptocurrency. In the digital age, cryptocurrency stands as the avant-garde of investment, dismantling traditional norms with its decentralized, blockchain-based system. This revolutionary asset class represents more than a new form of currency. It's a shake-up of financial systems, offering unparalleled transparency, transaction speed, and borderless operation. For investors, assets like Bitcoin and Ethereum provide an alternative vehicle for portfolio diversification, often uncorrelated with traditional market fluctuations. The crypto landscape is one of stark contrasts. On one hand, stories of incredible wealth generated overnight from modest investments. On the other, stark warnings of market bubbles and intense price swings. Cryptocurrencies are susceptible to speculative trading, regulatory news, technological developments, and macroeconomic trends, creating a roller coaster of risk and reward. Investment in crypto demands a futuristic outlook, understanding of blockchain's nuances, and a cautious approach to risk management. For those who master it, crypto represents a frontier of financial freedom, innovation, and significant potential returns. Number 4. Exchange-traded funds, ETFs. Navigating the diverse oceans of investment, exchange-traded funds, ETFs, emerge as versatile vessels. These funds, encompassing a spectrum of assets, echo the broader market's performance, offering a snapshot of its valleys and peaks. Unlike mutual funds, which often have higher investment minimums and are priced once daily, ETFs can be bought and sold during market hours, providing crucial flexibility in response to market movements. The real magic lies in diversification, as ETFs spread out exposure across industries, geographical territories, or asset classes, diluting the risk associated with individual securities. For the cautious investor, especially those making their maiden voyages, ETFs provide a sanctuary from the storm of market turbulence. Yet, it's crucial to understand the underlying assets within any ETF, as they are not immune to market downturns and require the same due diligence as any investment venture. In essence, ETFs offer a middle ground, bringing harmony between risk and reward, making them an essential tool in any modern investor's arsenal. Number 5. Peer-to-peer lending. Peer-to-peer lending, or P2P, is the financial equivalent of breaking down walls, allowing individuals to directly fund others without the traditional banking middleman. This modern marvel is facilitated by online platforms that meticulously vet borrowers and provide a marketplace where lenders can contribute funds towards a loan. The triumph of P2P lending is twofold. Investors can potentially earn significantly higher returns compared to traditional interest-bearing assets, while borrowers often benefit from more accessible or more favorable loan terms. Yet, the waters here can be tricky. The risk of default is real, and loan diversification within your investment portfolio is paramount to safeguarding your venture. Moreover, the lack of liquidity and the reliance on the platform's credit risk assessment procedures call for a discerning eye. Despite these risks, P2P lending stands as a testament to the innovation in modern finance, embodying the communal strength and offering a unique, more human approach to investment. Number 6. Precious metals. Precious metals, with their lustrous history, represent one of humanity's oldest forms of wealth preservation. Assets like gold, silver, and platinum are just shiny keepsakes. They are time-honored bulwarks against economic uncertainty. These metals are finite and universally valued, which underpins their appeal. In times of currency devaluation, geopolitical strife, or rampant inflation, precious metals have often been sanctuaries, safeguarding wealth while other assets tumbled. However, investing in precious metals isn't a golden ticket to prosperity. They don't yield dividends or interest and can be subject to speculative price swings. The costs associated with their purchase, storage, and insurance require thorough consideration. Furthermore, their value can stagnate or even depreciate during periods of economic stability and growth when other assets are soaring. Nevertheless, as part of a diversified portfolio, precious metals can serve as a sturdy insurance policy, an anchor of sorts, amidst the tempestuous financial seas. Number 7. Sustainable investments. The world is shifting towards a more sustainable future, and this transition is reflected in the realm of investing. Sustainable investments, also known as ESG, environmental, social, and governance investments, allow you to put your money into companies and projects that prioritize ethical, environmental, and social responsibility. By investing in businesses that actively work towards a greener and more socially conscious world, you not only potentially generate financial returns, but also contribute to positive global change. This modern form of investment empowers you to align your financial goals with your values. However, like any investment, sustainable investments come with considerations. It's essential to thoroughly research the companies and projects you're supporting to ensure they genuinely uphold their sustainability commitments. ESG investment funds can offer diversification, making it easier to invest in a variety of sustainable initiatives. As our world becomes more focused on sustainability, these investments have the potential to become an integral part of a forward-thinking investment portfolio. Number 8. Collectibles and rare assets. Collectibles and rare assets can also be a unique and intriguing addition to your investment portfolio. These can include items like vintage cars, rare coins, fine art, vintage wines, or even limited edition luxury items. The appeal of these investments lies in their potential for appreciation over time, often driven by their scarcity and desirability among collectors and enthusiasts. Collectibles can serve as both a passion project and a potential store of value. However, investing in collectibles and rare assets requires a deep understanding of the specific market and a passion for the items you're collecting. Unlike more traditional investments, the value of collectibles can be highly subjective and dependent on factors like rarity, condition, and market demand. It's essential to be well-informed and to consult with experts in the field to make sound investment decisions. This unique asset class can add a touch of excitement and personalization to your investment portfolio, but it should be approached with care and diligence. As we anchor back from our exploratory voyage across these 8 modern assets, it's clear that keeping cash in the bank is an outdated strategy for the contemporary investor. Whether you're drawn to the digital frontier of cryptocurrency or the tangible reliability of real estate, expanding beyond traditional banking allows your wealth to sail towards potentially richer horizons. Remember, strategic diversification is your compass. Thanks for joining us on this journey, financial explorers. If you found value in this voyage, like, subscribe, and chart a course to our comments section below. Until next time, keep navigating.